My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, guys, welcome back to Property Profits Podcast. I'm your host, Bryce Zaminsky, filling in for Dave DeBow. And have you ever wondered how turning personal tragedy into a purposeful real estate journey can lead to success? Well, today, my guest, Lauren Ziminsky, she's here to kind of help us out. And because she's kind of transformed her life through strategic real estate investments in the Midwest and Southeast United States. Lauren, welcome to the show. Great to have you here.
Thank you. Great to be here.
So, I'm sure people are going to want to know what personal tragedy inspired you to pursue real estate?
Well, my personal tragedy. What happened essentially is when my mother passed away was my big transformation. My mother passed away right after my second daughter was born, and she got sick and died 6 months into the start of her retirement. And so this idea of saving for retirement, and she was very prepared along with my dad for retirement. They were ready for those years. And so many of us are, and so many of us think about, oh, when we retire, let's save for that. And she and my father certainly did. And then 6 months into the start of it, she got sick and passed away. And so that was a huge transformative time for me because my husband and I at the time were on the same path. We were saving for retirement every month, putting money in retirement accounts and brokerage accounts. And we said, okay, on that day when we retire, many years from now, it's going to be great. And so her passing, right, waiting to 70, she and my dad were 70 when they retired. And then she got sick and passed. So the idea of waiting till I was 70 to draw from my investments seemed outrageous, given my scenario. So my husband and I kind of sat down and I said, we need passive income. We need to draw on our investments today, not when we're 70, today. And that was really the start of the journey. At the time, we had one rental. But really, we said, well, if we had significantly more of those, we'd be able to retire or become less reliant on trading our time for money at a much earlier age. So that's what we did.
So what's significantly more rentals than one?
I mean, now, as of today, we have just over 500 units that we've invested in, and some of those are with partners, some of those are on our own, but significantly more than the one we had when we started.
And how many years ago was that?
At this point, it was about 3 years ago that we started, well, I started focusing in on it.
So with the 500 units, are we talking about like LP stuff with multifamily, or is it 500 single family homes?
Oh no, it's I only have three single family homes. I had four, I just sold one. So I only have three, and everything else is multifamily. And it's a combination of JVs. I'm a general partner in some, limited partner in some, but it's really a combination of all those.
So that moment realizing, okay, I think that's a fairly common story too, is, like, let's say it's 60 or 65. How many real golden years do we get? Like 10, 5, none? So it's like you have to kind of look at that and say, what's a different strategy? And so is that why you started in real estate, or was that an accidental rental, like extra house and we should rent it out?
That's the first rental was very much that. I bought it before I got married, and my husband and I met, and we figured let's just rent it, and we bought something for us to live in. So that was a very accidental rental. After that, and after I really dove into this, everything was very intentional thereafter.
So with the types of properties that you invest in, is it small multifamily? So like, I guess what types of properties do you invest in and why?
Yeah, so the smallest multifamily I'm in is 36 units. I'm open to smaller. It's just been a bit harder to find the deals in the markets that I'm in. But yeah, so the smallest I've got, 36 unit, 40 unit, and then the largest is is an LP position in 112 unit. No, excuse me, 144 unit. I just closed on that. So 144 unit. I'm actually a general partner on that deal.
Nice. So a lot of people are looking for value add, but it can be kind of difficult in the Class A position because a lot of properties are already, relatively stabilized in the Class A. You don't really see like, oh, check out this rundown Class A building with a parking lot and laundry and stuff like that. So how do you find the balance and the value when looking at value add and Class A properties? Do you mostly do Bs or Cs? How does that work for your portfolio?
Yeah, mostly I'm doing B and C at this point. The Class A, and I'm in a couple Class A's. One is as an expectation of a very long-term hold. It was
Hmm.
built in 2022 in a fantastic location, and the plan is to hold it with my partners forever. So that I'm not really as concerned with those short-term gains. I just want to own a great piece of real estate in a great spot. So that's that one. The other one, Class A that I'm in, was very much it was leased up by the builder as quickly as possible. So the rents are under market. So
Hmm.
that was a great deal in the sense of you're getting a Class A new construction. Rents are under market because they got it, they had to, the builder had to. So we are raising rents over time. And that's really
So
the extent of the value add.
yeah, and I know a couple of investors who are shying away from like the construction value add side because it can be so unpredictable, and they'd rather do it on the management side where the building is predictable, but the people are always kind of a little bit unpredictable. So they'd rather manage the thing to success rather than renovate the thing and renoviction the thing and do that sort of stuff. So is that kind of the strategy there, is that you're mostly trying to like improve the cash flow through management rather than renovation?
It varies. It really varies. I mean, the one that we just closed on, the 144 unit, that had a pretty significant construction component, but the opportunity was there because we got it at such a good price. So it will be a combination of management and construction, but in this particular scenario, it's in a great location with 1970s interiors. So that is a construction component. But you're absolutely right. A lot of people these days, especially given that these 1970s properties are now 50 years old. So
Mhm.
it's significant. You're right. A lot of people are making that choice. But I still think if you can get a property at the right price, that construction value add can make sense.
Yeah, it's interesting. You look at properties now, you're like, oh, it's a 1970s, but then you think about like I'm 40 now, and when you go onto the website, you have to like scroll to find your birth date, and it used to be a little closer to the top of the tab. So these things are 50 years old, but they're very well built. Typically, the 60s, 70s are like a bit of a bomb shelter. Is that the type of thing you're finding in the Midwest and Southeast United States? Is a lot of that construction, or is it kind of few and far between?
It's really split. I can say that for even my own portfolio, it's been very split between sort of the Class A type of newer construction and then those construction projects. I mean, the deals are at this point getting easier to find. Getting easier is not the wrong word. It's a little bit better finding the deals than it was. But I'm open whether it's Class A, B, or C. I just want there's got to be an opportunity to add value.
So when you're looking at these properties, how do you identify what you see as potential in these properties?
So there's got to be, a clear way to increase the net operating income, within a fairly swift period of time. One of the properties we bought last year, when we bought it, actually a lot of it had already been renovated. It's a 1970s build, but a lot of it had already been renovated, but the owner had thrown in all utilities and cable and so the value add component there was, well, we don't really need to renovate, but we can increase net operating income just by passing on utilities to tenants, which they're going to get pretty much anywhere else they rent. So
Mhm.
so in a situation like that, that's where I would find the value add.
So what would you say your biggest success in real estate investing is so far?
my most exciting has been bringing people into it. Not even as much with myself. I've had some really exciting, profits from what I've done. But for me, I love the fact that I've been able to bring in many investors who have never invested in real estate. And I've been able to bring them into some of these deals and show them and get them those distributions and show them, how much money they're going to make. And, a lot of people in my life are very paper heavy. They've got all, they say, oh, I'm diversified, Lauren. I have 50 different types of stock. I'm like, no, that's not diversified. You need real estate. And so to be able to,
Diversified within the stock market. Yeah.
yeah, exactly, exactly. So to be able to introduce so many people to real estate for me feels like my biggest successes.
Yeah, and the other thing that's nice about the diversity in real estate is that the stock doesn't really go to zero. There's a lot of stocks that can disappear overnight or go up, and people are, loving Nvidia right now for their gains, and everyone's posting, oh, look at that. Um, at the same time though, there's very few posts about the stocks that go to zero. So um, when you look at your ability to bring people to the table as far as real estate investing, is that where the social media presence comes in to kind of grow and build that network?
Yeah, that's been a bit of a surprise. I started with just my personal network, and I'm sure, I bet you are someone who loves to talk about real estate like I do. So, you go to a party and everyone wants, you're going to talk about real estate. So, my personal network is where it started, but it's been really interesting as I've started sharing on social media because I am so passionate about this and I do want people to know about it. I've started having a lot of people reach out to me from social media who I didn't know before. And that has been really exciting because then that allows me to reach people that most of them are in a similar life stage as me. They have young children and they are trying to plan for the future. And I think my first post that went viral was when I said I bought a property instead of investing in a 529 account, which is the college account here in the United States.
Hmm. Hmm.
Um, and that went viral, and I was inundated by people wanting to know how to do that. And it was a really fun experience. So, yes, the social media piece. And then since then, I've had a number of people invest with me who met me on social media. And when I say invest with me, I've been able to investment opportunities with them. But it's been a really fun process and expansion of my personal network.
Yeah, you could almost put a book together on that, instead of investing in this thing here, but then you gotta buy a property, which some people just really don't want to be the person who's doing the hands-on part of it. So when you look at investing and doing the investment, where do you see yourself in the future? Like, are you going to continue to be more hands-on, or is it more that you're going to bring people to opportunities? What's that look like as far as the future?
I think I'll continue to bring people to opportunities. I really get a lot of value from that, and being in I live in California, and so I'm not in a place where I can be boots on the ground, and there's only so much
You
I can
could
do.
be, you could be, but the opportunity might not so much be in California.
Yeah, I could buy the apartment building for $1 million a door down the street, but I'd rather not do that. So, yeah, so it's different, right? So I have found that I think there's some phenomenal operators that I've connected to that get great deals, and that they're in the trenches with the local agents, and so I've joined their team, and I feel like my how I can really add value to them and their group is by helping them bring in new partners, and so. Um, yeah, it's one of the first, to your point about the passive versus active side. Some people don't want the calls regarding the toilet, and I'm active in a number of my properties, but I ask people, one of the first things I ask people when they say they want to invest in real estate is how active do you want to be, or do you want to be totally passive? Um, because many people don't even realize the option to be totally passive is even out there.
Hmm.
It's wild. So it's been really fun to show people that, some people who have careers that are incredibly demanding and they just want to diversify and they don't want really to be involved in any of the details. They just want to compound their money through real estate.
Yeah, they
And
want it deployed in a money-making position. So how are you tackling that challenge of identifying new investors?
I tend to meet meet people throughout, whether it's in my personal network or through social media. I've met a lot of people through social media that have been able to, join me in that sense. So I think that's those two avenues have really been the biggest way that I've done it. And, as long as it continues to work, I'm not going to fix it.
So what would you say would be something along the lines of, say, the biggest challenge you faced so far with the real estate investing?
Well, I think the interest rate hikes and I was in the middle of a couple transactions when those rates started to tick up, and it seemed like every week, this was in 22 now, 2022,
Mhm.
but it seemed like every week I was getting a rate mod, from the a quote from my bank. And I think that was the most difficult time because you've settled on a price and you've settled on what your returns are going to be. And then, the rates are like a moving target. So, and then since then, we all know what's happened to rates. So I think if there's anything that's been the biggest challenge, it's been, navigating that. I think there's tremendous opportunity that's come from it, and I'm really excited about the purchases I've made since rates have been high. But I think that that's been a big challenge.
Yeah, it certainly put a number of people on the bench, let's say, people that would have been normally actively investing now, I guess they're waiting for something to happen. Um,
I tell everybody if you can find a deal that works right now at these rates, buy it. I mean, buy it. You can refinance when rates go down. They'll
mhm.
really strong. The last property we bought it at a 9.5% interest rate, and the numbers work. I can't wait for it to be able to refinance it in a couple of
Yeah,
years, you know?
but at a 4 or 5% interest rate, like
Yeah,
half.
it's gonna be a home run. So we've got it. We've got several of those. So I'm telling everyone, don't wait on the sidelines, especially for those, even in the primary residence space. I'm specifically talking about the United States, but if I tell everyone, if you want to buy your first home, let's say, or even upgrade, if you can get into something now at these rates, do it because when rates drop, we're going to see an increase in competition and prices are going to go up.
Yeah, that's I think one of the reasons why they're staying the rate a little bit because if we have another like 2021, it'll be great for people who are holding, but not super great for people who are trying to compete with the open market. So, what advice would you give to someone who's just starting out in real estate?
The biggest thing I tell people is you got to meet other people who are doing it. And when I first started, nobody in my personal network really, okay, there was one, one person, and I sat down with him quite a bit, who was very involved in investing in real estate. But the majority of the people in my life were not. And it wasn't until I got into groups of people that invest in real estate that I really started to get comfortable with the idea. And I really started to get, once you have someone to call, and it really helps. So I tell everyone, go to meetup.com, search your city, real estate investor network. There will be meetups in your area, and just go and start to meet people who are already doing it.
So, the kind of the last question or so that I like to ask is the unfair advantage. What comes easy to you that other people find difficult to do?
Well, I have been told now by many people that I explain the concepts very simply. And that's, I think, why my social media has done, fairly well. And in that it's people have continuously told me, gosh, I never understood the burr method until you did it on your whiteboard. And now I get it. And so
Mhm.
I think situations like that. So I think if I've got an advantage anywhere, it's in explaining more complex things simply.
Nice, nice. So, if people want to find out more, they want to connect with you and possibly invest with some of the things you're doing, what should they do? How do they find you?
Well, you can find me on Instagram. I'm at Lauren Ziminsky, and Ziminsky, and or laurenzaminsky.com. You can find me there as well.
Awesome, awesome. Well, I really appreciate you stopping by, Lauren, and letting people know. Look at that, 3 years, 500 association with 500 doors. So definitely don't wait until your retirement to figure out that retirement isn't what it was cracked out to be. So yeah, definitely. I think real estate's available for everyone, and it's interesting you guys figured it out. And I think the big thing there is that I think a lot of people do what you did, but they don't take action on it. They just realize that real estate is something they could do, but then go back to work on Monday and continue on the plan that is already at hand. I think you can do both. Are you still at the W-2 job working it away, or have you guys decided real estate full time?
I am now full-time real estate. Yeah. So the real estate professional status, because I'm so active in our real estate really did make a difference for us too when it came from a tax standpoint. So focusing full-time just made a lot of sense for us.
And for people thinking about that transition, what was it that allowed you to say, okay, I'm going to move full time into real estate? Because it's hard to say when the right time to make that movement is.
Yeah, yeah, yeah. I think you've got to take a look. If you've got a partner, obviously it's something you guys have to be on the exact same page about. But how many properties do you need? How much passive income do you need to get you comfortable with leaving that W-2? And if you're in the United States, I really do strongly suggest looking into real estate professional status. I ended up getting my real estate license. I'm active in my local community as far as some investments here, meaning in California. So you've got to make the choice together with your partner if you have one. But I think the big thing is looking at the passive income. How much do you need to get you comfortable so that you can leave the W-2, and what's going to just get really, really granular on your numbers. I think that way everyone feels comfortable and everyone's on the same page.
Yeah, some people get excited and they're just like, I'm going full-time real estate and I'm putting in my 2 weeks. And it's just like, okay, but what about the 2 weeks after that when the paychecks stop? What are you going to do then, right? So,
And I tell everyone you want to you want the capital so that you can make moves in real estate. And even if you're doing the Burr method and you're, extracting your capital after you do it, you want the cushion. It shouldn't be stress. I mean, it's always going to be a little stressful, but it shouldn't be too stressful on your family. And I have two young children, so that's keeping a lower stress environment in our home is really important. So get on the same page as your partner, get granular with your numbers, and really look at what the tax implications are of you leaving, because it is pretty significant once you do become a real estate professional. What can happen from a tax standpoint.
awesome, awesome. Well, I really appreciate you stopping by, Lauren.
Yeah, thank you.
No problem. Until next time, guys, we'll catch you on the next episode.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.